Hello and welcome back to the TradeNeon software YouTube channel. And also welcome back to our market analysis video series where we have a closer look at a market that is currently fundamentally interesting and analyze it within Futures Insights, our market analysis platform for the most relevant futures. If you don't know me yet, my name is Simon Reichert. I'm part of the TradeNeon Academy team. And in this video specifically, I want to have a deeper look with you at SI, the silver market traded at COMEX. Also, if this is the first video you're watching in this YouTube series, I would highly recommend you to go back and watch the initial video I did in this series, because this was the video where we first covered what you can find within Futures Insights, what it's good for, and well, all the basic stuff when it comes to the platform. But before we finally head into analyzing, please be aware that trading in derivatives or securities in general involves financial risk, and please don't mistake this video for investment advice or intermediation. So with this finally out of the way, I would say let's promptly head into our setup. So what we can see here on the left, first of all, is Futures Insights. And now with the release of Futures Insights to the English market, and also with the release of Level of Interest, our other TradeNeon software, we now change the user interface a little bit. So you now have this menu bar right here on the left, for example, where you can switch between softwares and also go to your profile settings. And also what's quite neat is that we can now switch our preferred languages from German to English or vice versa, which I already did prior to this recording. And what we can also see here is that we get some, well, general information about the future. So tick size, tick value, what the common trading hours are, and so on and so forth. But what's even more important or interesting, I would say, is now our first indicator, which is the dry powder for managed money long and for managed money short. So these are abbreviated and mean just that. Now, these indicators basically display us the open interest of market participants. In this case, it would be the managed money side, which would be large speculative institutions. And we can gain, well, a couple of different valuable insights from that. Because what you can see here in white is the current open interest as it was reported in the COT report from the CFTC, the Commodity Futures Trading Commission. But we don't only get to see this, but also what the historical positions were according to the COT reports, with these green and for the short side with these red dots. And the interesting part is that as we go back in time, these dots start to fade. So you can see here this one dot that is already quite faded is from 2016. Maybe we get one that's even more in the past. Well, not this one, but it traces back all the way to 2015 as of right now, where we are in 2025. And what's really interesting about this is that we get to see, well, basically how these institutions are usually set up. So if you can see a position that is quite extreme or that is quite abnormal, it tells us, depending on the situation, very useful things. And this is already a situation that is quite interesting when it comes to the dry powder indicators for the managed money side. Initially, you might get the impression that this is not really, well, an extreme position or a relevant position, because we have the current open interest here. The absolute value is not even that important. It's rather about the historical comparison. And when you compare it historically, you can already see that, well, we had open interest in the past that was, well, much higher than what it currently is. But that is the beauty of these indicators, is that we can see what the current relevant playing field is and not what these dots used to look like. So if we take the current, and this is already, you always have to eyeball this a little bit with these indicators, that we can see the relevant cloud for open interest would have to be in this in this area right here. Or if you want to make it even more relevant for the current analysis, it would be this right here, where the dots are really, really bright. And when we only take this cloud into account, we can already see that the current position, it's not extreme, but it's definitely in an area where we say a lot of institutions are engaged, and for when it comes to historical standards, they hold more open interest than usual. On the other side, when we have a look at how much short open interest the managed money side is holding, we can see that it's quite low. So in terms of historical comparison, again, it's super, super low. Actually, if we take the relevant cloud and kind of disregard these open positions that are far into the past, you can see that it's almost at an extreme state. Now, what can we take from this picture? For the managed money side, we have to identify them as trend traders. So if there is an ongoing trend, they will build up their positions. The thing is now, if we approach an extreme state of managed money, then we have to ask ourselves the question, if already all the market participants are long engaged in this case, who is going to build even more long positions? And I want you to take this information with a bit of grain of salt, because obviously it could always happen that new extreme positions occur in the market. But I mean, that's the thing with trading. We always trade with probabilities rather than with black or white. But with this, we get the statistical advantage on our side that we know that usually the action happens within this zone, right? This was the relevant playing field, or even this one, where we had open interest in the last couple of years. And one more thing I want to add is that we certainly should not mistake these indicators that we get from the COT data in this case, or the fundamental data in general, for entry signals, because COT data and fundamental data are not entry signals. They tell us in which direction we want to think long term and which direction is best for trading, and not that we should immediately hop into a trade. This is never what we should do, and so in a second step, we should always complete the analysis with a proper chart analysis component. This is certainly one thing I cannot stress enough, because this is one of the major missteps, I would say, we very commonly witness, and it just simply doesn't have to be that way. But just to address the managed money situation, finally we can see that the managed money long is very actively engaged in this long trend. However, it could be a bit more. That is one thing we have to keep in mind. So this is not all, and this is not a historical extreme position, but this already indicates that we have an abnormal state within the market where the long side is very actively engaged and the short side is simply not engaged whatsoever. But as I said, we always have to eyeball a little bit with these indicators, and because we don't want to solely rely on that for, well, forming an informed decision which direction we want to trade, we also develop the overbought, oversold indicator, which you can see at the bottom here, which is going to take the current open interest and put it into relationship with other factors, which include price, which include the involved market participants, and the total open interest. And I believe this needs no further discussion. This combination seems to be working quite well. So we get these signals right here that I believe come with quite impressive precision and tells us if the current open interest is in extreme position or not. So we currently get this 77% signal, which simply means that this is 77 out of 100 extreme, but this doesn't always mean that only the 100% works. For example, we got these signals right here, which we only had 88%, or we got these signals right here, where we had 84%. This is again why we have to combine the fundamental analysis we do in Futures Insights with a chart analysis that follows what we do in Futures Insights. But what we can see right now, or what we saw, is that we got this signal. It's always a bit hard to hover over with the mouse. Now we got it with 77%, which basically supports our short perspective that we have when it comes to silver. Now let's have a closer look at the dry powder indicators for our PMPU side. So when it comes to the PMPUs, we have market participants that are commercially involved with this underlying good. PMPU stands for producers, merchants, processors, and users. With these market participants, they basically require this underlying good for their production, or they want to simply sell it, so they don't speculate on trends. They have a different mission or objective in mind. This would mean that if currently a lot of PMPUs are buying, that these commercial traders believe that the market is currently interesting and that it's a good time to basically buy the underlying good. And the same thing also applies to the short side. If they were to sell quite a lot, this would simply mean that the market is monetarily quite expensive and that they deem this as a good opportunity to sell their products for, well, a good amount of money. As you can already see, however, neither of them is the case. So the PMPU long side is not buying at all, and the PMPU short side is selling a bit more, but it's no way near a relevant position where we want to say, well, they are buying more than usual or they are selling more than usual. And this also means that we don't get a signal in the OBS indicator. This is obviously a bit unfortunate because really the best situations occur when both the OBS indicator for the PMPU side and also the OBS indicator for the managed money side both display a signal that is obviously for the same direction, so short or long. Let's have a quick look at the open interest. So the open interest is displayed by this blue line right here. And in green, you can see the current price for the silver future. It depends a bit on the market, but if for the silver market, the open interest and the price are positively correlated. So that simply means that they would go in sync. If these two lines, if the price and the open interest were to diverge, we could analyze this further, because this would simply mean that something is not in sync, but this is not the case right here. The open interest is rising, the price is also rising, so everything is fine. Also, it's in a state where the market is very liquid, so this is something we can use the open interest for as well, to determine if the market is currently not liquid enough to do trades in this market, but the current position is certainly in a very good state, so it's above average, I would say. Oh, and by the way, you don't have to memorize all these little things about the indicators. I know this is a lot to keep track of, so in order to help you with that, we will soon release some little guides that will tell you all the important aspects and details about the indicators and how you can use them. So this video is really supposed to be on the practical analysis of these markets. I just want to give you a bit of context. Next up, let's have a short look at the flow cube. So the flow cube we use basically as a supplementary indicator. We don't get any signals from this flow cube, but it can be used as additional valuable information about the current market dynamics. So we can basically judge how convincing current market movements really are. In this case, we got week long building in the last week, which would mean that in comparison to the week prior, we had a higher price. We had an increase in open interest, but we had less traded volume. And the week before, we even had a strong long building. You can already see the price jump right here. So this was supported by a massive increase in volume. Let's quickly discuss the seasonals. So I think I already explained these in the video before. So we can already see that the current season is about to end. The current short season is about to end, which is obviously quite unfortunate, but that's just the way it is. We cannot expect that much more support from this short season for our upcoming short trend in silver. Lastly, we have our indicator for term structure. Right now we are in a contango state, and we had the contango state already since roughly 1.5 months, which is very good. So the contango state is the normal state, the way it should be. So that simply means that the future contracts that are further into the future become more pricey simply because of storaging costs. For example, that is one factor. And we can do short and long trends. We don't want to do short trends in a state of backwardation. So when the future contracts that are closer to expiry become more expensive than the future contracts that are further into the future, because this would indicate a supply shortage. But I think I already explained that in the last video. For the silver market, this is a bit strange. Keep in mind, this is official CFTC data that we import in Futures Insights, but the difference indicator, so the relationship between the first contract and the consecutive future contracts and the price movements seem to be anti-correlated. That simply means if the term structure relaxes and goes further into like the good state, the contango state, the price seems to go up, and as the difference indicator goes up, so that simply means that the term structure moves into a backwardation state, the price usually drops. Normally it would be the other way around, but in this case we basically have to think the other way and exchange short signals for long signals and the other way around. So in this case, this would actually be seen as positive for our short trade, but generally the difference indicator and the term structure have to be used with caution in the precious metal markets because, well, these indicators simply don't work that well in the precious metal markets, which the silver market also belongs to, obviously. So from what all we have seen, the silver market is currently quite interesting for a short trade. However, we should certainly not rush into a trade and wait at least for a good chart setup opportunity. So now with this being said, I think this marks a good opportunity to now conclude this video, as there has been a lot of information to digest. So if you have any comments, recommendations or questions, please feel free to drop us a comment and we will get back to you as soon as possible. With this being said, I thank you very much for watching and I hope to see you again in the next episode.